And today's topic is insight into the foreign companies, that is, company incorporated out of India and running the business in India. So it's interesting topic, though it may be limited. We can say that it could have limited to the certain class of companies and company secretaries. But I'll say as on today, when India is growing and each and every country is interested to set up a business in India, this is a very important chapter which was not so much important for all CS earlier. In view that as on today, in hook and corner of India, forget tier cities, 2-3 tiers, foreign companies have investments. And in view of that, this is a very important topic, that what is looked by Indian regulatory from overseas investors or overseas businessmen who wants to do or who are doing business in India. As this presentation and our panelists will also explain and elaborate and discuss on what is foreign companies and how it comes into the purview of Indian regulatory authority, even though they don't formally set up any entity in India, whether branch, project office, or only on subsidiary or JV company. So welcome to today's webinar. And today we have with us our panelist, Mr. Yug Sabat, who is Vice President and Group Company Secretary of Interglobe Group of Companies. Welcome, Yug. Thanks for your time. And we have our presenter, Mr. Teja. Teja is having experience of around 7 years in diverse industry in legal and compliance. And he is overseeing corporate governance and board administration process. He is a postgraduate degree in financial planning from Canada, associate member of ICSI and BCom. He is handling our Hyderabad branch. Welcome, Teja. We have with our panelist, Mr. Yug Samrat. Though he has a vast experience, but he has provided very small profile. But friends, he is having a diverse experience. Mr. Yug Samrat holds position as a Vice President and Group Company Secretary of Interglobe Group of Companies. He holds graduate degree in Law and Commerce from Delhi University. He is a fellow member of ICSI. He has over 25 years of experience in corporate law, fundraising, international merger amalgamation, accounts and finance. He has worked with various senior positions, including Network 18 and Investment Limited, Lafarge, and Pepsi. Friends, to be noted that he is having accounts finance experience, and that is going to be added advantage for us in today's topic. He is going to give insight into that aspect as well, which each CS should take care, because it's not that only secretarial, but we should have 360-degree little bit knowledge of everything applicable to a particular transaction. Interglobe Enterprise is a large Indian conglomerate having leadership position in aviation, hospitality, and travel-related services. And it's a business into civil aviation, airline management, hotels, and advanced pilot training, aircraft maintenance, and real estate. Welcome, Mr. Yug. Thanks a lot.
Thank you, Dipti. Thank you for the generous introduction.
Yeah. And friends, as usual, we have with us Mr. Bala. Everyone knows him. I need not now introduce. For again, in unfortunate, Mr. Sudhakar is busy with one presentation. I know it's second Saturday is absent. He has sent the apology to all the participants. But we have with us Mr. Yu, who is very well versed with the topic, and we'll have an interesting discussion on the topic. And I will request Mr. Yu to say a few words on the topic, and then Mr. Bala for a few words, and then Teja, you can start your presentation. Over to you, Mr.
Yeah. Thank you, Deepti. Thank you for the generous introduction. And good morning, everybody. So, as you know, Deepti has given a very interesting opening remarks that your economy is opening up and foreign companies are interested in India because India is a vast market and every MNC is interested. So, of course, you have the option of opening a subsidiary company, and you also have option of, starting your branch. So, depending on the requirement, as a professional company secretary, as Deepthi rightly said, so you should actually, evaluate 360-degree, all the aspects as a, advisor to the board and the senior management. So not only various aspects under the Companies Act, which Teja will be taking us through, but you also have to look into whether the company has a long-term plan, or you just want to do some research and development and explore the market. So you can start one liaising branch, or you want to also start with a small business to test the market. Maybe you can start a branch because everything has its own pros and cons. If you want to start a subsidiary, of course, if you have a long term plan to stay in Indian market, that is the right thing to do. But it has its own implication. Like, for example, tax. If you are having a branch in India, that will be subject to 40% tax. Though I'm not a tax expert, but I'm giving you just indicative this thing. And but if you have a subsidiary and your income is royalty, etc., so then tax is just 15 to 20%. So to the huge tax saving from tax perspective. But at the same time, you have to set up the entire governing process, having board of directors here, and the companies have plethora of compliance requirement as compared to branch, which is not very complex as compared to a company. So, and of course, if you want to start a business in India, whether it is a branch or a subsidiary company, you must look into the objective of the company, whether it is permissible as per FDI policy or not permissible as per FDI policy. So you have to look into, various aspects. And even if you are starting a branch, it has to comply with all the requirements of your income tax. They have to obtain PAN, TAN, GST registration, PF, ESI compliance, shops and establishment, on everything. All the compliances are applicable to branch as well. So you'll have to look into all the aspects, of these things. So, so with these notes, I think I leave the discussion for further elaboration.
Thank you. Thank you, Mr. Yu. Mr. Bala, a short introduction.
Good morning to all of you. I have a great pleasure in welcoming you all. And we have really a eminent panelist who has actually worked with the foreign global things, and he will share his experiences. As he rightly puts it, yes, this particular topic is not practiced very much by many people, even not by the employed people. Very few companies, they establish the business with their overseas, etc. But only thing is, as he really said, what is actually required by the overseas companies? Maybe they want to do some survey, they want to find out initially and other things and all. In such a case, they can simply open a license office. License office is nothing but representing the overseas company, collecting the information and passing on the information, starting a messenger service. Nothing beyond that, not much of a compliances, etc. and other things all required. Depending upon that, they may do the business, they may not do the business. Our next thing is, as he really said, the branch office. Yes, branch office has got its own intricacies, etc. And the third thing is that sometimes what happens, people may quote for Indian tender. When they quote for the Indian tender, certain project they will undertake. So that leaves only shorter duration, maybe 2 years, 3 years, whatever it is. So what they will do, they will probably open a project office. When they open the project office, then the requirement, etc., is totally different. But altogether, they want to do the business in India, then they want to business in India, there are options which are available to them. One is actually they open the subsidiary company here, or they can also open a subsidiary company where they take the Indian partners. So that really makes the difference here. If the Indian partners are actually there, how much, what is the percentage, what are the different, be touching upon all these aspects in our today's presentation. And second thing is, when we are talking about the compliances, etc., for foreign companies which are actually regulated, this is regulated by the designated ROC, which is actually based out of Delhi. Because it is not in the local. Even though you may open an office, you may have a unit open in Bangalore, Hyderabad, Chennai, etc., but your reporting always remains at ROC at Delhi. And again, reporting format, etc., is something different. And again, when you talk about the overseas company reporting requirement, because whether they allow to report entire things, what is maintained in overseas or what is pertaining to Indian operations, what is called for, that make the difference. Again, what are the information which can be called for? All those things are also there. And again, very importantly, since all the foreign directors and other things, people are all sitting mostly outside India, who's the contact point in India? That makes the difference. From that point of view, they need to have a contact point in India so that they have to reach the people, they have to catch all the people, they want to get the information. These are all certain intricacies which are actually involved in this aspect. So I think, Teja, as we get along, I think our panelists will definitely share all these aspects and we will get to know more of the things. As usual, I request all of you to put your queries in the chat box. We will be taking up then and there whatever the questions are there. It will be answered actually. At the end of the presentation, you can raise your hands and we can permit you to speak and we can interact as well. I give a pause here. I'll ask Tejas to take a presentation forward. Over to Teja, please.
Thank you, sir. Good morning, everyone. Good morning to all the panelists and whoever are virtually connected. Good morning, everyone. So let me share my screen first. So all the ifs and buts are put out by the panelists, all the three panelists. So everything will be briefly covered during the slideshow that I'm going to present. So let's now dive into the topic, that is an insight into provisions related to companies incorporated outside India. Chapter 22, covering sections 379 to 393A. Let me talk you to the introduction. So in this presentation, I'm exploring the key provisions of the Companies Act 2013 governing companies incorporated outside India. It highlights the legal framework, registration, compliance requirements, reporting obligations for the foreign entities that are operating in India. And the session also aims to provide concise insights into these regulations, ensuring clarity on their role in fostering compliance and governance in cross-border business operations. At the starting of the discussion, Deepthi ma'am rightly pointed out, stating that now the economy has opened and all the foreign investors are looking at India as an investment opportunity to venture out and explore. So when business is coming to India, that comes along with the compliance and governance issues. And this slideshow answers a couple of queries in ensuring an efficient cross-border compliance and operational activities as well. Now let's see the core definition that is required for this entire presentation, that is foreign company, which is defined under section 2, subsection 42. Foreign company means any company or body corporate incorporated outside India, which has a place of business in India, whether by itself or through an agent, physically or through electronic mode, and conducts any business activity in India in any other manner. So not only having a place of business, but it should conduct business. It is very critical there. Yeah. And now we understood the definition of foreign company, which is key to this presentation. Now let's see to what extent the Companies Act is applicable to the foreign companies that are operating in India.
Can you please go back to the previous slide? Just wanted to add
Sure, sir.
So basically, if you can see, clause B, which conducts any business activity in India, this provision was not there under the 1956 Act. You know that a company doing business in India, it's not necessarily they need to have a physical presence in India. So to plug the gap, this particular phrase, conduct any business activity in India or in any other manner, it was added. So as you know, in the new age of technology, especially these online companies, etc., they can do business having a physical presence in India. So, if company has a distinct branch which is visible and a separate office, that is an easy thing. You can identify that you have a branch in India. Whereas, for example, if you have online presence and you don't have any physical branch in India, then how do you establish whether you have a branch in India or you don't have a branch in India? So, couple of things that can be kept in mind. If the company has physical presence without having a proper office, then you can be deemed to having a branch in India. Or if your services are consumed in India, like for example, there was a case with the income tax, Uber versus CIT, where it was held that if the consumption of the services are in India, then even if you don't have a physical presence in India, you will be deemed to having a carrying on the business in India. Or if any value addition is done in India, or where the user base is in India, like for example, it was again income tax case, Google versus CIT, it was in 2021. So if you are having this, user base is based out in India, then you will be deemed to having a branch in India. So, friends, basically, you need to understand the typical character of a branch. A branch is nothing but extension of the parent company in foreign jurisdiction. So there is no separate legal entity as such in India. It is just the extension of the foreign company. So no separate legal entity is required here, and that's why you don't need to set up a separate, governing body here like board of directors and secretary, etc., etc. However, as Mr. Bala said in the beginning, you need to have a representative, authorized representative. If tomorrow government want to reach out to your branch or your company, then there is one designated person, because whenever any income tax authority, any regulator, or your registrar or any other body, they want to reach out to this branch, then who is the contact person in India? And that contact person must be resident in India, tax resident in India, not necessarily citizen, but it must be a resident in India. So it is also important that, because it is not a separate legal entity, this branch can sue and it can be sued in India because it is carrying on business in India. And as per, maybe if I remember correctly, section 20 of CRPC Act, which specifies that if you are carrying on business in India, that is your place of business, then you can file a suit against that company in that jurisdiction. So these are, few thoughts. And as Mr. Bala rightly said in the beginning, branch, there can be different kinds of branches. Like, there may be liaising branch and there may be a proper branch. So the key difference is that in liaising branch, you don't generate revenue and you don't do business activity. It is just you want to do some research, you want to conduct, market research and explore the market, whether you want to do the business, but you want to see whether your product is viable, you want to develop contacts in India, explore possibilities of, joint venture partners, etc. Or you have a big project, for example, metro project is there, so some foreign company want to execute, so they may open one liaison office or a branch office. So these are the few things which I want to highlight.
Thank
Yes,
Carry
you.
on, Tej.
Yeah.
Another thing is here, when you talk about, the electronic media, that make the issues little complications. I think very recently you also might have seen also there are many disputes, etc., which are actually arising doing the business on electronic media today. That is one thing which is actually there in the act now. Yeah.
Yeah, this is very important point you highlighted, because this was very well discussed when the act came, because through electronic mode is very crucial, and one very important thing, and conduct any business activity in India in any other manner. So they have covered everything. If you do any business activity in India, boss, you have place of business. Place of business means you are subject to regulation. You are subject to income tax. You are earning the income from my country. So you are responsible. Make someone responsible. Make my people who are your client, I want to protect their right. And this was a very important amendment this Companies Act brought. And because of this. So as a CS, we have to, when people say any foreign company wants to do any business and they inquire, we have to be very careful that, boss, you are doing any business activity or seed marketing or anything, you are subject to regulation. It's not that you are not subject to any regulation. That is very clear from this definition itself. And just to clarify because the topic is confusing, why we are telling foreign company incorporated out of India, because they are subject to regulation, because the foreign companies wants to do business in India, though it is pertaining to regulation pertaining to the business done in India. So that's why our title will be different. The participant will say company incorporated out in India, that is foreign company which are doing or intend to do business. For that, this webinar is there. Yeah, Akshar, you wanted to say something?
You are very right, Dipti. Actually, what happens is, as our panelist actually put it, there is no separate incorporation registration of the companies as such done in India under the framework of the Companies Act. This is already an existing company in the overseas, which are actually incorporated under the jurisdiction of the Overseas Act, actually. Yeah. Now what they are doing is they are extending their office in India as a branch, which is already in existence. So there is no separate entity as such is coming. But however, all the rules and regulations which are pertinent to their operations, as you said very correctly, whether it is a project office or it's a branch office, whether it's a representative office, whether it's a wholly owned subsidiary, again within the wholly owned subsidiary, whether it is 100% owned by them or it is partnership basis with the Indian versus other people, etc. Depending upon that, all the Companies Act provision, even including CSR regulations, are applicable. That is very clear. And second thing is, you rightly touched upon any revenue generation which takes place in India, they are all subject to goods and services tax, they are all subject to income tax, they are all subject to profitability tax. And second thing is there, the money is actually being expatriated. Again, the RBI regulation, etc., which also will come into, ultimately the regulation is very important. As you rightly said, our professionals have to understand the nitty-gritties of the issues of the applicable laws in totality, not only looking upon the Companies Act. Yeah.
Yeah.
So, Mr. Bala, I would like to add what you just said. One more thing, that there is a fine difference. As you know, the companies having a limited liability, whereas in case of a branch, so the difference is, suppose you start a company here, so then the liability of that company will be limited to the share capital of that company, right? Whereas if you and you cannot touch the share capital or assets and liability of the parent company. Whereas if you want to open a branch in India, then you can claim the assets and and cash of your parent company as well. So in that sense, the liability of a branch is unlimited, so that you can reach out to the shareholders' wealth also and attach their property if the assets of Indian branch are not sufficient. So that is one thing. And another thing I want to add here is, at this point in time, is the income tax. Like, suppose our company have a branch outside India, the same principle applies. Most of the countries have bilateral treaties for treatment of tax. For example, if you have a branch in India, So whatever revenue you generate in India, for example, then of course you have to create and create a separate balance sheet and profit and loss account for your branch, and that will be subject to audit also. So you have to pay tax in India for in regard to your income which is generated in India. However, if you have a double taxation treaty with your home country, then you can get credit of those taxes paid in India. For example, if you have paid 100 rupees tax on your branch in India and you have, say, 500 tax in your US or your parent companies, so you will get credit of these, 40, 100 tax paid in India. So that will depend on your, if you have a double taxation treaty with your respective country.
Right. Thank you.
Yes,
So,
Tejas, go ahead.
yeah. So from whatever the discussion that happened right now, we clearly understand that 2013 is clearly covering a lot more of ambit than 1956 Act. And going further, now let's dive into the sections. That is Section 379, application of the Act to foreign companies. So Section 380 to 386, both inclusive, and 392 and 393 are applicable to all foreign companies. And subsection 2 talks about where not less than 50% of the paid up share capital, be it equity or preference or partly equity and partly preference of a foreign company, is held by one or more citizens of India, or by one or more companies or body corporates incorporated in India, or by one or more citizens of India and one or more companies or body corporates incorporated in India, whether singly or in the aggregate. Such company shall comply with the provisions of this chapter and such other provisions of this Act as may be prescribed with regard to the business carried on by it in India, as if it is an Indian company. So it is whatever we are doing, it is only limited to the business that is carried only in India, not the entirety.
Yeah. Teja, I would like to add something here.
Yes, sir.
So first of all, this subsection 2 of 379 does not confer a foreign company a status of a company incorporated in India. It is only a deeming fiction for a specific applicability of Chapter 22 and other notified provisions. So it is not that the entire Companies Act will be applicable on such companies. And to my understanding, the company will remain a foreign company. It will not become, the status of the company will not change. It will still remain a foreign company. Only the specific sections will apply as if it is a company incorporated in India. So that is the key difference. And if you see the distinction between the two is that as you must be aware about the round tripping. Round tripping, it was frowned upon by the RBI and it was prohibited, until recently in August 2022, RBI permitted, round tripping companies. So in round tripping, what companies used to do, they used to, invest in overseas companies, and those overseas companies will give back that money into India, thereby creating a circle. And in the process, they used to laundering the money, converting black money into the white money and putting illegal money into the system. So because there were many instances of round tripping which was observed, so therefore RBI always looked into these kind of investment, that you make investment in overseas companies and those companies again make investment in India. That was not permissible. However, in 2022, RBI permitted this round tripping, that you can make investment up to two layers of the companies. So that is also important, that if you want to make investment here more than two layers, then you need to take approval from RBI. That's that.
Yes, sir. Agreed. Now let's see what are the documents.
I know
Yeah.
there are questions relevant to this. We can take it. Mr. Bala, if you can take in the chat box.
Yeah, sure, why not? Do Section 1 cover foreign company years under which subsection? if this provision of application of the foreign company supplied equipment to the Indian company and they install the machineries in India.
1 minute, one question will take. So
Yeah.
the question is whether section 1 cover foreign company. If yes, under which subsection? Mr. Yug, you will like to say this.
So, it is mere supply of, goods. For example, if you are importing something from overseas company, it does not mean that you are carrying on business in India, you know. So, if you are importing, coaches, for example, your metro rail, if you are importing coaches from Korea, so it does not mean that they are carrying on business in India. They are simply supplying on the basis of your one-on-one contract. So doing business in India, that they have a presence in India, they are soliciting client, they are raising invoice, and they have staff for that purpose.
There is we can say the conscious effort to make aware their products in India, to create a market in India, maybe little bit seed marketing, you can say, then it is seed marketing. Once in a while, or kind of once in a transaction does not turn it into business, doing business in India, right?
I will put it differently. What you said is correct actually. But what happens in case of the supplying the machinery in India, in fact, Indian people locate the prospective people from whom they can buy the material. We get the import license. They are asking them to supply the material to us. It is on our request. They actually fulfill our requirement, what we actually wanted. That is why that import and export, that policy takes place. Import and export procedure is actually there. As you rightly said here, they want to actually put their business in India. They are coming forward. They are propagating our business. They are generating revenue by making a publicity in India. That is what it makes the difference actually.
Yeah. Next question.
Yeah. Why is the round trip is now allowed?
So, it's not that that the RBI or the government machinery will not regulate or look into your investment. They will always, because all sorts of investigating authorities are there. So the moment I say allowed does not mean that they allowed your, money laundering or any foreign corrupt practices. So that is not the case, because there are certain genuine companies they want to do business in this manner. So only those companies are allowed. So it does not mean that the regulator will always keep a watch on you. It's like, if you are doing something wrong, then the police will come behind and catch hold of you. So similarly, if you are round tripping, does not mean that you're allowed to do money laundering.
Yeah, you
What
may.
will be? Yeah. Yes, Dipti.
Yeah, same question. Read, please. You skip that.
Yeah. What will be the situation in case of the partnership or proprietor situated outside India?
So it is covering only the companies. The partnership is not governed under the Companies Act.
Yeah, in fact, partnership is coming under the LLB Act. In
Yeah.
fact, a lot of audit firms who are situated outside, they are doing a business here by establishing things that is actually covered under the LLB Act. Yeah. Then next is round two. We said 2-layer provision is applicable if we actually require the company which is already having a 2-layer subsidiaries.
There is a specific provision in the Companies Act if you acquire the companies with 2-layer of subsidiaries. So that we have already covered in subsidiary. Yeah, Mr. Yug, if you want to comment otherwise.
Yeah. No, I agree with you. I agree with you, Dipti.
What would be the decision if the import equipment is in the name of the executing agency instead of the contractor? I'm not getting what exactly is this.
Yeah. Suppose in between. See, it's Mr. Rajgopalan. It is the case wise. We can't comment. Like if that executing agency you have appointed to procure all your project equipment, you can't tell that this is our business. So it's a general talk we are keeping. So each case is different. So
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 Deepti, if I may add, if you have a project in India, that suppose, for example, I can take example of metro rail. So if you take a project in India for execution of metro rail, and you execute those projects in India, so then you will be deemed as a branch because you are doing business, actually doing business in India. Whereas if you are only supplying the material, then it is not a branch. You understand the difference?
Yeah.
Yeah. So basically, the difference is that if you have a project, execution of a project in India, then still you will be deemed as a branch. And whereas if you are simply importing products from many overseas companies, that is not considered as a branch or doing business in India. Anybody can import from anywhere, whether it is a company, private individual, but that does not mean that foreign company is doing business in India.
yeah.
Can you please tell which chapter shall apply to the foreign company's branch? If not, less than 50% of the paid-up capital is held by the Indian. I think he is going to discuss this matter. The forthcoming slide, it is actually coming. Okay, please wait. I think Dipti, we can go ahead.
Yeah, please.
Yes.
Teja.
Yeah, now let's see what are the documents that are to be delivered to registrar by foreign companies. Before I explain the section, now here for this chapter, registrar means Registrar of Companies, New Delhi. Bala sir, at the beginning of the presentation has clearly mentioned that registrar is only ROC Delhi and nobody else. So that is clear for these provisions and it is clearly stated in Rule 8 as well, which we'll further see in the upcoming slides. Yeah. So whatever the documents are to be submitted to the registrar, it should be done within 30 days of starting its business in India through Form FC1. The following are the documents that are to be submitted. One is certified documents. Certified copy of the company's charter, statutes, or memorandum. And if it is in any other language, a certified English translation is also should be attached. And office address. Complete address of the company's registered or main office should be mentioned. Next, directors and secretary. List of directors and secretary with prescribed details. The details will be explained in the coming slide, where rules clearly state what details of the directors and secretaries have to be mentioned because they would be the nodal point or the connecting point for the Indian compliance requirements. And then Indian representative. Details of individuals in India authorized to receive legal documents, and Indian office. Full address of the company's main office in India should also be mentioned. And if you have any prior history of operating or closing business in India, that has to be attached. And declaration of no convictions or bans for directors or representatives should be attached. And any other prescribed information, if required, should be added as well. Next slide.
I think in respect of the representative in India, I would request our panelists to say a little more elaborate so that we know the representative occupies what exactly the important position here. Yes, please.
Yeah. So, Mr. Bala, see, the thing is that if any foreign company is doing business in India, and it is important that there should be one designated person. If tomorrow, any regulator, whether it is income tax or SEBI or ROC or any other government agency want to reach out, so this is one designated person to whom they can reach out to in India. Apart from that, as you can see, we have to file the list of directors, details of directors and secretary of the foreign company as well. So that does not mean that the directors and the secretary of the foreign company, we cannot reach out to them. The regulator will reach out to them as well if in case of any violation or in case of any investigation. But the primary contact person is the authorized representative who is nominated here. So that is one thing. And also, there are certain documents which are required to be submitted. So though, because these documents are not in original, these are copies coming from foreign jurisdiction. So these are required to be apostilled. So as you can, you might be knowing that the apostillation is a process of authenticating the genuinity of the document. It's a certified copy of the original document, right? So under the Hague Convention, if there are many countries which are member of the Hague Convention. They have signed the Hague Convention. Then any apostille document is accepted by the countries who have signed the Hague Convention. And if any country which is not member of the Hague Convention, then the apostillization process is little bit more complicated, because that is a two-layer process. One is that the ministry of the relevant country of foreign affairs will certify, and additionally it will be also certified by one more designated authority, that is counselor of that country in the respective jurisdiction. So it's a two-layer process. It is time consuming and little bit more complex and little costly also. Whereas the apostolization is accepted universally and it is a simpler one window clearance process.
But one thing is there, I think the attestation is not like notarizations. Because
Yes,
notarization, what we do is actually something different. As he rightly said, it has got its own intricacies because it is totally authenticating the document to its genuinity. That is what it is actually called for, duly apologized. That is the procedure, I think. Yeah.
Yeah.
Yes.
Thank you for clarifying this apostille and consularization. Lot of queries generally come. What is the difference? Which country? Thanks, Mr. Yuk, for that. Thank you.
you can refer to Hague Convention 1961 if you know any of you want to refer to it.
And not only that, in case of the Indian representative is concerned, the details like, his PAN detail, his resident details, his credentials, all the things are required to be given in order to establish that a duly authorized person who is there. That is actually run a check actually here. Yeah.
Okay. Yeah, Teja. Go
Yes, sir. Thank you for giving the information about Hague Convention. Most of the participants would be looking into it right after this presentation. Now let's go forward. Subsection 2 talks about any foreign company that existed when this law came into effect. If it has not already submitted the required documents to the registrar as per 1956 Act, it shall follow the obligation to submit those documents as per the old law. And subsection 3 talks about if there are any changes to the documents that are already submitted under Form FC1, the same can be made within 30 days in prescribed Form FC2. Now, Rule 3 of Companies Registration of Foreign Company Rules 2014. This talks in detail about the list of directors and secretary that has to be submitted to ROC Delhi. Every foreign company must, within 30 days of starting its business in India, submit to the registrar, in addition to the details mentioned in Section 381 of the Act, a list of its director and secretary. The list of directors and secretary or their equivalent title must include the following details for each person listed. Full personal name, that is including first.
1 minute, one question is there. I think somebody says, please repeat the name of the convention.
It is Hague Convention. HAGUE, Hague Convention.
In fact, I think 140 people are actually members to that convention. Yeah.
Yeah.
And another thing is there, if the forms are apostilled at the time of the submission of the FNC, is it required to do it again for FC1 in case of delay in filing the FC1?
No, every document, whatever document you're filing with the regulator, that has to be apostilled. So whether at the time of originally FC1, FC2, so any document which is going to the regulator has to be attested. Otherwise, how would the regulator know the genuinity of that document? It may be a fake document,
Yeah.
So they have to rely on the documents.
Yeah, that you're right. Actually, any document which is filed that calls for the apologies, but here the question is saying that if it is delayed, again the same document is to be apologized. That's what I think so, because he is asking whether again it has to be done if there's a delay, etc. I don't think that is the case, because the document anytime which is filed for the first time or any modification which will take place, then that is actually called for. Yeah.
Yeah.
Yes, Tejas, go ahead.
Yeah. So now let's see what are the details that a list of directors or secretary or equivalent title. For each person, these details have to be mentioned while submitting in the forms. First is full personal name, that is first name and surname. Any previous names or surnames that they may have had, father's, mother, or spouse name, date of birth, residential address, nationality. If their current nationality is different from their original nationality, include their original nationality as well. Passport number, issue date, and country of issue. If the person has more than one passport, provide details for all. PAN, if applicable, occupation, if any, and if such person is a director, already a director and having a DIN, then those details and the company's SIN in which he is a director, all those have to be mentioned. Other directorships held by them. If he is a secretary, then the respective home country membership number, email address. Yeah, so if you see, there are a lot of details that are being requested by the registrar, because I think you, sir, you can address this. The reason behind we securing all those information with respect to old passport history or the old names, if any, that would be helpful for the participants, I guess.
Yeah, sure, most certainly. There is another important thing here, which is regulatory approval. So, as I mentioned in the beginning, because any company which is doing business in India, and if you see the detailed FC1 form at the time when it is filed, they require all the information about the company and as well as the directors and the secretary. The reason being that who are the person responsible for that company. Like in India, if regulator want to or income tax authority want to issue any notice for any demand of income tax or if any investigation, so what they do, they pick up the government's website and they access who are the directors, and then they pull out the detail and then issue the notice. Similarly, if it is a foreign company, because I don't have any visibility on a foreign company, how would I know that who are the directors, and why should I struggle to find who are the director and who are the secretary
Right.
responsible for this company? So regulator wants that upfront you provide these information to me, that tomorrow if I need to reach out to any director or secretary, then I will simply pull out the detail from the ministry's website and then issue the notice. And if there is an investigation, ask them to cooperate and participate in the investigation. So that
Yeah.
is the key objective. Also, at the time of this thing, you also required to submit RBI approval. As you all know that opening a branch office will require prior approval from the Reserve Bank of India. And while granting, though it is not that we are not discussing this in detail, but I would like to briefly touch upon the process that you are required to file a form, but before you file the form, they look into the net worth of the company and the past track record of the company, RBI. So you should have at least 100,000 US dollars net worth and consistent track record of profitability in the last 5 years. And again, name and details of the company, the entire details of the background of the company and the relevant officers, directors, etc. So all the details are submitted to RBI, and then RBI basically has delegated this authority to authorized dealer. So authorized dealer can give you a permission to establish a branch. That delegation of authority is with the AD bank, provided that you are making an application for 100% automatic approval route activity. So if your activity of business, proposed business activity requires prior approval from the government, then AD will not grant approval. Then you'll have to reach out to the Reserve Bank of India, and then RBI will, on case-to-case basis, will consider your application and then allow opening up a branch.
If a company is actually if the company is actually a subsidiary company, from whether it has to be submit documents to RBI.
See, setting up of a company is a different thing, and setting up a branch is a different thing. So for a branch, you require specific approval of RBI, whereas for opening a subsidiary, you don't require any specific approval of RBI.
The large
Designation first.
The logic
Yes,
is
please.
the subsidiary company will be fully regulated by the Indian laws.
Companies Act,
Yeah.
basically,
So
and
that's
other rights.
why RBI doesn't come into picture. It comes into specific transaction like capital or transfer, wherever it is specifically mentioned. If it is applicable, then otherwise no.
For
Yeah.
establishing subsidiary of a foreign company, you don't need to reach out to RBI at all. Well, only for incorporation of a company,
Yeah.
Designated person would be from India or outside India.
And also, all the documents, as I mentioned earlier, even if RBI will insist on apostille document, whenever you submit application to RBI, they will also insist on apostille document.
Yeah.
Yeah, here designated person is from India or outside India.
No, designated person is from India only.
From India. The
Yeah,
logic
he has to be Indian resident because he can be a foreign national, but he has to be Indian resident. The whole idea is the regulator are able to reach out somebody who's actually residing in India. That is the whole purpose of this. Yeah.
So they also insist for his PAN number, whether he's paying taxes, his net worth. So they evaluate that the person who is your authorized representative is a person of established credibility. It's not that the person having a criminal record can be appointed as authorized representative. So that is also important.
Yeah.
Yes, go ahead.
Yeah. So regulatory approvals, which in detail now just now Yuksar has discussed. RBI approval, it is mandatory. So an attested copy of that approval under FEMA or relevant regulations have to be attached. Apart from the RBI approvals, if there are no other approvals required, the entity has to provide a declaration from the authorized representative stating that we need not require any other approvals. That declaration has to be attached as well. And the form FC2, as discussed earlier, it is with respect to the changes of the attached documents in form FC1, and the changes have to be intimated within 30 days. Now let's talk about the accounts of the foreign company, section 381. Foreign companies must prepare a balance sheet and P&L in the prescribed format annually and submit those copies to ROC Delhi. The prescribed format and what are the details of it will be discussed in the upcoming rule in the next slide. Subsection 2 talks about exemptions given by central government. Certain companies may be exempted or allowed exceptions as notified by central government from time to time. And if the documents, if the financials are not in the English language, and if it is in the home language of that foreign entity, a certified translation must be attached for the ease of the regulators. And fourth subsection is submission of business locations. The entity must submit a list of all business locations in India through Form FC3 by paying prescribed fee as on the latest balance sheet date.
So, Teja, I just wanted to add, in our practical experience, we have been dealing in cross-border companies. We have companies across Europe, Singapore, Mauritius, Indonesia, and all. So, whenever, especially like, European countries like Spain, France, so they have all their official documents in their home language. So, Spanish company, their certificate of incorporation is in Spanish. So you will not be able to understand what is written in the Spanish language.
Yeah.
So
Yeah.
obviously that's why you need a translated copy of that document, so that Indian regulator will understand what is mentioned there. Like for example, your articles and memorandum may be in local language, and I've traveled Europe and I've seen all these European countries. Some of them really they feel offended if you are not talking in their home country language, mother tongue, and they encourage people to talk in their and it will be difficult to communicate in English, because yeah, majority of the people like in Spain, people prefer to speak in Spain. They discourage speaking in English, unless of course in business environment where you are dealing with MNCs and all. So then Of course, they have setup where all the people generally speak English, but generally, all their documents and official documents are in Spanish language.
Yes, sir. I second that. I have traveled to
Your
couple of yeah.
yeah.
I have traveled to a couple of French provinces in Canada as well, and I totally understand from which perspective you are talking.
Yeah.
I also wanted to actually tell you here, when you say I happen to work in overseas countries, especially when it comes to the Democratic Republic of Congo and also Equatorial Guinea. The official language there is actually in DRC, that is Democratic Republic of Congo, is actually French. And Equatorial Guinea is actually Spanish. And in fact, we were operating a company which was actually having the headquarters at Bahrain. And we have the branches established and all the places, subsidiaries and all. I used to go for conducting the general meetings. And one of the requirements there was we are supposed to even file the board meeting minutes there with the registry there. So what we have to do is, because the board meeting ministry, since it is contain a lot of confidential information, we used to make two different minutes. One is actually the resolution based, the decision which are required to be communicated to the registry. Other is which is required for our internal purposes. It is always written in English, but they would like to see their minutes are actually converted in their official language, Spanish, in Equatorial Guinea, and as well in French in Democratic Republic of Congo. Not only that, below that, if we have to write there, this is actually a translated version of English which represents the true proceeding of the minutes which is actually taken place. It is required to be signed duly by the company secretary and as well as the chairman. This was the practice I have seen in overseas countries. So similarly, here also, when you are bringing a overseas country's language, naturally it is required to be translated in English and it is required to be filed. That is what the requirement is there. Each country has got its own provisions. Yeah.
Mr. Bala, it is very interesting and quite a unique requirement that you are required to file your minutes, because as you rightly said, minutes are absolutely confidential and they may be price sensitive. Your confidential information is discussed in the board at the board level.
I was really surprised. I was really surprised. I went and checked with them. They said, we are not interested in what you are discussing in confidential information. What is the decision is taking affecting to the shareholders and other interest? That means the resolution based. That is what we want. That is what they said actually. So what we used to prepare is, we used to prepare the elaborate minutes for the entire board meeting. Then he only picks up those decisions which have been taken by the board that we used to separate out. We prepare the two set of minutes, one for the filing purposes, one for our internal purposes. Internal purposes containing the various information, confidentiality, etc. is never shared. But only the decision based, what they are talking, that is only filed with them. That used to be the practice.
Because
it was which is the unique thing I experienced in these countries actually. I never heard of it. Yeah.
And I don't know whether those documents are open for public inspection. And if it is open for public inspection and anybody can go and inspect competitors' strategy being discussed in the board meeting if you are required to file actual board minutes.
No, those strategies are not required to be filed. It is only
sure.
decision. That's what I said actually.
Only the decisions.
Only the decision based is to be filed. That is why we prepare two set of minutes. Yeah.
Okay, understand.
Yeah. Yes, go ahead.
Interesting insights, Balasi. Now we'll discuss how the balance sheet and P&L, what is the format that is given in the rules. That is Rule 4 of Companies Registration of Foreign Company Rules 2014. Foreign companies must prepare financial statements for their Indian operations annually, following Schedule 3 format or closely similar. Documents to be included. One is documents as per Chapter 9 of the Companies Act 2013, that is Accounts of Companies. Latest consolidated financial statements of the foreign parent company as per home country laws. Again, attach a certified English translation if the documents are not in English, and submit specified documents if exempted or directed by the central government. Foreign companies also must attach a related party transaction statement when filing their financial statements with the registrar, that is ROC Delhi. Now let's see.
Teja, before you proceed further, can I take a moment here?
Of course.
See, the financials are prepared only in respect of your branch. and this is important to ascertain your income. And as you are required to pay taxes in India, so there is a mandatory, tax audit for branch operations in India. So any company having a branch in India, they must conduct their tax audit. And audit of the accounts is a mandatory. Whereas in certain cases, there is a threshold based audit. But in this case, it is mandatory that you must conduct audit of your accounts. And tax audit is also mandatory.
Yeah. Yes. I
One
mean,
question is being asked, in case of the any discrepancy between the original document, that is other than the English,
Hmm.
and the translated version, that is in English, what would be actually the court accept?
See, the court will obviously accept the original document. Any error in translation, error cannot be accepted or taken on record. So obviously, at the first instance, when you are submitting any document to authority or court in India, they will be able to understand only the English language. You know, if they can understand French or Spanish, then what is the requirement of submitting a translated version? Translated version is given because they cannot understand the foreign language. And how would they establish that there is a difference between the original document and the translated document? So if during the course of any litigation, if the other party establishes that there is a discrepancy in the document, then obviously the original document will prevail, not the translated version.
Yeah, you are actually right. In fact, in overseas also, I had a similar problem like that. When we get it translated, because we used to use the service of the translator who actually get translated Spanish in English or French into English. But I was not very sure whether the translation was actually correct. So what we have done is we located the person in our own company who knows both the languages. I used to always go to him. I used to tell him, can you just spend some time and you see whether it is actually representing the correct translation if there are error. Few cases there used to be some sort of error used to be there. Then I had to go to the translator. I think I spoken to our executive. He has actually gone through. He got a little reservation on this. Would you like to look into this? I used to get corrected. As I told you again, they actually wanted to have an undertaking below that signed by the chairman and the company secretary. This is actually a correctly translated version of the original proceeding. That also they take actually there. That was a case. Actually, I had a tough time in translating and filing the documents, etc. in these countries actually. Acha, one more question has come up. Two Indian individuals incorporated a company in US. Those individuals are actually promoters of the Indian company. The US company is main sales representatives of the Indian company. We can say source selling agents of Indian company in US. Do provisions of the Companies Act 2013 applicable to those US company?
So if you see, any company which is originally discussed by Teja made a presentation in the beginning itself, that any company in which, foreign company in which Indian promoters have more than 50% stake and they start business in India, then the provision of Chapter 22 will apply.
but I think in the question they are saying that the operations are in US.
So operations are in US.
So
Yeah,
Bala,
that is what it. Yeah, that is
Yeah.
what it is. See, what it says is the individual actually started the business in US.
Mhm.
Those individuals are promoter of the Indian company. The US company is the main sales representative of the Indian company. That means sort of a source selling agents of Indian company in US. That means Indian products are being sold in US by having an office there. Do this provision of the Companies Act 2013 applicable to those US company?
No, I don't think, because they are not doing any business in India.
Correct. Because those, whatever the establishment is done there, I think that country's governing laws will be applicable, whatever is required as we are talking. When you open the branch office, when you open the subsidiary, Indian Companies Act will be applicable. Similarly, the US laws will be applicable, those companies which are actually established in US.
So you have to do business in India. So unless you are doing some business in India, there is no logic of applying these provisions to any foreign company. And these provisions are basically to plug the gap that without incorporation, if you have incorporated a company in India, then all the details are with the authority. But if you have not incorporated a company in India, you are simply doing your business, then these provisions says that you are required to register all the information, including details of director, secretary, authorized representatives, and details of your foreign company with the regulator. So that and you also need to file your balance sheet, and you also need to file your annual return, so that the regulator knows what is going on in this company and who are the person responsible.
One more question is asked here. Certain countries' accounts are not required to be audited when making the consolidation account by Indian company. How this would be actually done?
So the audit of the home country is, regulated by the home country's regulation. So Indian companies will not be giving any mandate. Even unaudited accounts are accepted, as long as, because when accounts are audited, for example, if your accounts are consolidated in India, so Indian auditor can rely on unaudited accounts of a foreign jurisdiction where audit is not mandatory. So management accounts can be relied upon. However, those will be subject to audit by Indian partner. They will have to satisfy, at their level about the authenticity and process of those audits.
Certain country accounts, sorry.
Mr. Bala,
Next question.
next question is not relevant to this topic. Don't take it. Even earlier question was totally reversed. So this is regarding FEMA and NRE account and all that.
Okay.
Take the questions which pertains to our current topic only. So we can go ahead.
Yeah, sure.
I just wanted to give a disclaimer here that I am not the tax expert. So these are the reply is based on my own experience. I mean, you'll have to take expert opinion on that, because it will depend on facts and circumstances of the case. Yeah.
Yeah, whatever the discussion we are having throughout the presentation, it is all our responses to the queries and to the presentation, and whatever, it is not case to case, or we are not solving any issues legally here. It has to be gone to an expert. That is a clear disclaimer that we are giving. Yeah, let's continue. In the related party transaction statement, what are the details that are to be included? Name of the related party in India as defined under Section 2, subsection 76 of the Companies Act. Nature of the relationship with the related party. Description and nature of the transaction. Amount of the transaction during the year, including opening, closing, highest and lowest balances, and if any provisions are made. Reason for the transaction. Material effect of the transaction on both parties. Amount written off or written back concerning dues from or to related parties. Declaration confirming the transaction was conducted at arm's length price. Of a statement of repatriation of profits, which shall include.
Teja, can I make some comment on related?
Yes.
Sure.
Please go ahead. Please go ahead.
So I think related party is a very, very contentious subject. And the other day I was discussing with Mr. Sudhakar. Unfortunately, he is not there in today's discussion. So I think Mehta themselves have done, I think, 4 sessions on related party transactions, if I'm not wrong.
Yeah, that's right. You're right.
So this topic itself is a very, very vast and intricate subject. Related party is the bone of contention, because companies resort to manipulation in pricing and diversion of profits from one company to another, and that's why regulator want to regulate related party transaction. So having said that, provisions of section 188 will not apply to this company, but again, government wanted to know that what kind of transactions are being entered into, so that is on record. Generally companies transfer profits and avoid paying taxes. They manipulate their accounts to avoid taxes or to siphon money to other companies and other jurisdiction. That's why this related party transaction is a contentious issue. And for international transaction, TP study is mandatory.
Yes. Thanks
If if after the incorporation, Indian company becomes the wholly owned subsidiary of the foreign company, whether this chapter will be applicable?
No, because Indian company is in any case is regulated by Indian Companies Act. So it is applicable only if the company is not incorporated under the Indian Companies Act.
You are absolutely right, because the very purpose is saying that the company incorporated outside India. That is the starting
Absolutely.
point of the definition, actually. So
Yeah.
here it is actually company incorporated in India. So question does not arise at all. The definition is very clear. We'll have to go by the definition. In fact, we have started with the definition section in our Companies Act very first time. Yeah.
I think there is a thin line of difference where the audience are getting a bit confused. I can understand that. So thank you for
No.
addressing
One
this.
thing is very clear. Incorporation is done in India. It is totally under the
Yeah.
Indian Companies Act, under the Indian Company Law, whatever it is. If the incorporation is outside, then
Yeah,
the
we are
business is
discussing.
being done. Then that is what we are being discussed here. Yeah.
It's what we are discussing. Any
Yeah.
foreign company again, word is company, setting out business in India,
But
not
incorporation is outside India, not
But-
in India.
but not by way of setting up company in India, then this is applicable. Simple.
Yeah, chapter 22 is all about that.
Please. Yeah, go ahead.
Yeah. Next is statement of repatriation of profits, which shall include amount of profits repatriated during the year, recipients of the repatriation, form of repatriation, dates of repatriation, details of repatriation made to a jurisdiction other than the residence of the beneficiary, mode of repatriation, and approval of RBI or any other authority, if any. The other statement that should be included is statement of transfer of funds, including dividends, if any, which shall in relation of any fund transfer between place of business of foreign company in India and any other related party of the foreign company outside India, including its holding, subsidiary and associate company, shall include date of such transfer, amount of fund transferred or received, mode of receipt or transfer of funds, purpose of such receipt or transfer, and approval of RBI or any other authority, if any. Yeah, I think this is interlinked with the topic that Yug sir has just discussed about siphoning of funds. And the sub-rule 3 talks about the documents related to this rule shall be delivered to the registrar within a period of 6 months of the close of the financial year of the foreign company to which the document relates, provided the registrar may, for any special reason and on an application made in writing by the foreign company concerned, extend the said period not exceeding 3 months. Going further, section 382, which talks about display of name, etc. of foreign company. Every foreign company shall clearly display the company's name and country of incorporation on the exterior of every office or business location in India in legible English and vernacular language, and state the company's name and country of incorporation on all business documents, including letters, billheads, letterheads, notices, advertisements, and other official publications. Also, it has to include a statement of limited liability in every prospectus, business correspondence, billheads, letterheads, notices, and advertisements, and also display a notice of limited liability on the exterior of every office or business location in India.
This is what our panelist actually said when we talked about the liability of the foreign companies. So that means there is also a display requirement is actually mentioned in the act. Yeah.
Yeah, absolutely.
Anything you would like to add, sir?
So, these display provisions are applicable to Indian companies also, you know it very well, because if you are doing business from any place and suppose there is a visitor, any police officer or any other person who is going there or any investigator, regulator is visiting that place, so they should know which company is operating from this place. And the basic requirement is that it should be fully disclosed. It's not that you are doing business here clandestinely and you are not making any disclosure. So people should know that who is operating from this operation, from these premises. And also in all your communication, whether it is business document or your letterhead. So you have to clearly mention that this company is incorporated outside India. What is the name of the company? So that any person who is dealing with that company, they should know that they are dealing with a foreign company. It's not a regular Indian company, because dealing with a foreign company may have certain implication, having a litigation with a foreign company and all of that. So it is slightly different. So people should know that with a full disclosure that they are dealing with a foreign company.
Yeah,
Yes.
go ahead.
Yeah, Section 383 talks about service on foreign company. A process, notice, or document is considered served if it is delivered to a person whose name and address were provided to the registrar under Section 380, left at or sent by post to the address provided to the registrar, or sent by electronic mode.
So
So this
precisely, we were talking about that,
authorized representative.
when authorized representatives details are filed, so he is the person, primary contact person, where all the communication will be addressed to him.
Yes. Yeah. Going forward, Section 384, which talks about debentures, annual return, registration of charges, books of accounts, and their inspection. In simple terms, everything is mutatis mutandis applicable, be it debentures or annual return under Section 92, or registration of charges or books of accounts under 128. But the only catch is that for the books of accounts, they must maintain whatever is related to the Indian operations and the transactions related pertaining to only the Indian business. And also, as Bala sir rightly said in the beginning of the discussion, including CSR provisions, it is applicable as an Indian entity. There is no escape or an exemption for that. I think he can throw some light with respect to CSR. He had a practical experience. Sir, would you go ahead?
Yeah. In fact, we established a foreign company here, actually, which was doing a business in Bangalore. And it was actually being monitored. There was a company secretary was there, but once the company has actually crossed those limit, then the question of CSR applicability had come. They wanted to do the CSR activity, but most of the people who are not very familiar here, etc., and other thing and all, they were actually finding a difficulty. It was actually done through the license of the Vodafone Group where I was actually working. So they actually approached what is to be done because to discharge the CSR obligations. Then we know the Vodafone Group had got a Vodafone Foundation, which was actually doing the CSR activities for the entire Vodafone Group of companies. Then we suggested, okay, the Vodafone Foundation will accept the CSR contribution from you. They will actually do the CSR activities, what is desired, wherever areas you identify, wherever you want, etc. Then we can give the details, etc. That is what. Then they have actually done the CSR activities through the Vodafone Group. And not only that, they continue to do it year after year. Even today, that company is in existence, they are still continue to do it. That is the thing.
Yes.
Of course, there are registered agencies as there. If you can identify the registered agencies, you can also do through them. I know some of the companies in Pune, foreign companies are there. They have actually identified, I think one of the agencies, if I recollect, the name is actually Magic Bus. So they have been actually doing through this authorized agency, Magic Bus, who have got the track record, etc. They have been doing it. So there is no escape, as he really said. The CSR expenditure has got to be done, and the necessary filing has also required to be done to that effect under the company side. Yeah.
Absolutely, Mr. Bala. Since the provision of CSR, the entire provision of 135 is applicable to a branch office. If you are earning profit, so the fundamental is that if you are earning profit using the resources of Indian soil, then you have to spend at least 2% of your 3 years average profit in CSR initiative. And it is regulated as in case of an Indian company. Section 135 and the rules made thereunder, everything is applicable to a branch office also.
Yes. Yes. And with respect to the annual return, Rule 7 talks about it. Rule 7 of Companies Registration of Foreign Company Rules 2014. Every foreign company shall prepare and file annual return of the company in Form FC4, again with the Registrar of Companies, New Delhi, within 60 days from the close of the financial year. The form is more or less similar to the annual return that we do for an Indian entity, with slight modifications or differences. And section 385, which talks about fee for registration of documents, it is in detail discussed in the coming rule. That is Rule 8 of Companies Registration of Foreign Companies, Rules 2014. Yeah, here it clearly states in the rule that any document which any foreign company is required to deliver to the registrar shall only be delivered to the registrar having jurisdiction over New Delhi. And references to the registrar in Chapter 22 of the Act, that is companies incorporated outside India, and these rules shall be construed accordingly. Which means that under this particular chapter, if wherever you see registrar, the registrar is only the ROC New Delhi. It clearly states that, including the rules. And the fee paid to registrar for registering any document relating to a foreign company shall be provided in the rules. More or less, if you go to the forms in the help kit, you can find the fee structure. For example, for form FC4, the nominal fees is 6,000, and if it is delayed, the additional fees would be pounding upon. And subrule 3 talks about if a foreign company ceases having a place of business in India, it must immediately notify the registrar. From the date of notice is given, the company will no longer be required to submit any documents to the registrar as long as it does not have any other place of business in India.
Yeah, here the gentleman who raised the question about doing a business in years, I think he has come back, probably it appears to be. I raised another question. I do not know whether you have actually answered this question since I lost the connectivity between the things. That is the same thing he repeated, the incorporated company, Indian individuals that comply the provision of consultancy in Indian companies, and they actually obtain some consultancy from Indian company as well. Now he is adding the point. Their business with the Indian companies less than 25% of the total turnover, but the company actually covered under section 379 of the Companies Act. Your reply will be different if the US company does not have any other responsible employees in UAE and other than the few sales people.
I think this is very specific question. It's a very long and it require analysis. It's not right to ask panelists this way, the very specific question. It can be handled separately, please.
Yeah, I agree with
Or
you, Dipti.
I will leave it to Mr. Yug if he wants to.
I fully agree. Basically, I'm not very clear
It's a
what exactly is the question.
It's
No,
Yeah,
no. One thing is there, even by reading the question, we are not aware what is the full details. Without knowing
yeah,
the full
exactly.
detail, we cannot just face off it over it. But the earlier question, what you said, actually, doing a business is US and not doing the business in India does not make the thing. So if they are doing the business only in US, then US Act will be applicable, not in Indian Act. But so long as business is done in India, and again the company incorporated outside India, then only this chapter applies. Otherwise, it does not apply. That's it. Yeah.
Absolutely, Mr. Balakrishnan. Yeah.
Yeah. Now let's go to section 387, dating of prospects and particulars to be contained therein. First subsection talks about requirement for prospectus. A prospectus offering securities of a company incorporated outside India must be dated and signed, contain specified particulars, that is company's constitution, incorporation details, and address for document inspection. And also the matters to be stated in the prospectus under section 26 of the Companies Act 2013. There are certain exceptions to the above clause. The above clause do not apply to a prospectus issued 2 years after the company is entitled to commence business. Subsection 3 talks about void conditions. Conditions requiring an applicant to waive compliance with the requirements or binding them to documents not mentioned in the prospectus are void. Subsection 4 talks about application forms. No application form for securities can be issued without being accompanied by a compliant prospectus unless it is for a bona fide underwriting agreement. Subsection 5, which talks about the non-applicability of the section, that is prospectus issued to existing members or debenture holders, and prospectus for securities uniform with previously issued ones listed on a recognized stock exchange. And subsection 6 talks about the liability. The section does not limit liability under other provisions of this Act or other laws in force. Section 388, provisions as to experts concerned and allotment. A prospectus offering securities for a company incorporated or to be incorporated outside India cannot be issued, circulated, or distributed in India if the prospectus includes an expert statement who has either not given written consent or has withdrawn it before registration. The prospectus does not clearly mention that the expert's consent was obtained and not withdrawn. The prospectus does not comply with the provisions of Section 33, that is, issue of application forms for securities, and Section 40, that is, securities to be dealt with on stock exchanges. Subsection 2 of 388 talks about a statement that is considered to be included in the prospectus if it appears on the prospectus face, incorporated by reference, and issued along with the prospectus. Now, Section 389 talks about the registration requirements of the prospectus. No person shall issue, circulate, or distribute a prospectus in India offering securities for subscription in a company incorporated or to be incorporated outside India, whether or not the company has established or will establish a place of business in India, unless prior to the issue, circulation, or distribution of the prospectus in India, a copy certified by the chairperson of the company and two other directors confirming that it has been approved by a resolution of the managing body has been delivered to the registrar for registration. And the prospectus must also clearly state on its face that a copy has been delivered for registration, and it must include any required concerns for the issue of prospectus as per Section 388 as discussed before, and such other documents. Now let's see what are the other documents that are prescribed under Section 389, which is discussed in detail under Rule 11 of the Companies Registration of Foreign Companies Rules 2014. Along with the prospectus, the following documents shall be annexed, namely, one is any concern to the issue of prospectus required from any expert person. 2, a copy of contracts for appointment of managing director or manager, and in case of a contract not reduced into a writing, a memorandum giving full particulars thereof. C, a copy of other material contracts not entered in the course of business but entered within preceding 2 years. D, a copy of underwriting agreement and a copy of power of attorney if the prospectus is signed through duly authorized agent of directors. Yeah. Now, this is again a point of discussion. Section 390, offer of Indian depository receipts. Notwithstanding anything contained in any other law for the time being in force, the central government may make rules applicable for. The rules are further discussed going forward. The offer of Indian depository receipts, the requirement of disclosures in prospectus or letter of offer issued in connection with the Indian depository receipts, the manner in which Indian depository receipts shall be dealt with within a depository mode and by the custodian and underwriters, and the manner of sale, transfer, or transmission of IDRs by a company incorporated or to be incorporated outside India, whether it has or not has established or will not establish any place of business in India. Now let's see the Rule 13 of Companies Registration of Foreign Company Rules 2014, which talks in detail about the issue of IDRs. A foreign company, in this case it is the issuing company, whether or not it has a place of business in India, cannot issue IDRs unless it complies with the conditions in this rule alongside the SEBI ICDR regulations 2009 and any other RBI directions that are applicable. The preconditions for issuing IDRs, that is, the company must have a pre-issue paid-up capital and free reserves of at least $50 million and a minimum average market cap of $100 million in its home country for the last 3 years. The company must have been continuously trading on a stock exchange in its home country for at least the last 3 years. The company must have a track record of distributable profits as per Section 123 of the Companies Act for at least 3 out of the last 5 years. These are all the preconditions for issuing IDRs by the foreign company. Now, if the conditions are met, The issuing company shall follow the following procedure for making an issue of IDRs. Necessary approvals have to be obtained, or if there are any exemptions in its home country, they can be considered for the issue of capital and IDRs. The issuing company must obtain a prior written approval from SEBI for the IDR issue, including the issue size. And the application to SEBI must be submitted at least 90 days before the opening date of the IDR issue. Now let's see what is to be included under the application for the issue of IDRs. The draft prospectus, prescribed form along with the fees, and other information as specified by the SEBI. SEBI has the power to request for further information or explanations within 30 days from the date of receipt of the application, and SEBI will dispose of the application within 30 days from the receipt of the additional information. If SEBI requires changes to the draft prospectus within 60 days, the issuing company must incorporate these changes before filing it with SEBI or ROC. Upon approval from SEBI, the issuing company must pay the issue fee to SEBI as prescribed. And also the issuing company must file the prospectus certified by 2 authorized signatories. One is the whole-time director and one is CFO, with SEBI and ROC New Delhi before the issue. Apart from the other document, yes.
They just wanted to add something, though these are very comprehensive provision incorporated here. But if you look at the history of IDRs, there is hardly any company which came out with IDR in India. The Standard Chartered Bank came out with the IDR in 2010, where I think Deepti ji advised them on certain issues, and it was not objective of that issue was not to raise funds, rather creates its visibility. And there were a lot of tax issues and the compliance issues. So thereafter, I think no other company did, as far as my knowledge goes. Other panelists may add.
Yeah, and we were consultant to the said IDR issue to Standard Chart, and we followed, and I myself visited MCA Delhi, and they were also exploring the requirement. Rather, they have worked along with SEBI to draft this regulation, because when they intended, there was no regulation as such. And even the MCA was exploring that what should be their role and the requirement. But they carried out that since it is raised in India, the similar requirement which Indian companies follow, same they follow. And actually, we were, working along with MCA. And then it was clarified that, yes, it should follow the same thing.
Yes,
Yeah.
yes.
Yeah, and I think that's why these comprehensive provisions are here.
Yeah.
It's more like prophylatic provisions, less invoked. Yeah.
And as you rightly said, sir, if I'm not wrong, even Standard Chartered have delisted their IDRs from both BSE and NSE in 2020.
Yeah, as he rightly said, it was actually not successfully taken, because the purpose is not for the fundraising, it is only the visibility and other thing and all. It had has own problem, that is why that is happening.
Yeah.
Yesterday, Dipti was also mentioning this, really. Yeah.
Yeah, absolutely.
Yeah, apart from the other things that we saw what are to be included in the prospectus, the following also must be included. That is first thing is board resolution, approval details, SEBI's approval copy, and a statement of fees paid to SEBI. And prospectus filed with SEBI and Registrar of Companies New Delhi must contain the particulars as prescribed above. And the prospectus must be signed by all the whole-time directors of the issuing company, the CFO. Yeah, and the issuing company must appoint an overseas custodian bank, a domestic depository, and a merchant banker for the IDR issue. They must also appoint underwriters registered with SEBI to underwrite the IDR issue. The issuing company must deliver the underlying equity shares to an overseas custodian bank or ensure that they are delivered. The overseas custodian bank will then authorize the domestic depository to issue the IDRs. The issuing company must obtain in-principle listing approval from one or more stock exchanges in India with nationwide trading terminals. Now, the merchant banker to the IDR issue must deliver the following documents or information for registration with SEBI and ROC Delhi. I know that these are all theoretical aspects and more or less we are covering ICDR, but still I'll go ahead with the presentation.
No, IDR is actually nothing but is similar to counterpart of the ADR or GDR. What is actually raised? It is actually the Indian companies who want to mobilize their funds from overseas. So they raise the ADR and GDR. They bring the money.
Yes.
Conversely, if the foreign companies want to raise money from India, then the IDR provisions are there actually. More or less, it is a similar thing what is applicable to all the ADRs. The same rules and regulations are applicable to the ADR as well. Only thing is you appoint the depository person, people here use a custodian in India here, and again the underlying is actually securities. Similarly, if you are having a overseas, the counterpart, the other country, you have to actually establish, these people who will, the securities will be actually pledged, etc. That is the provision what you are saying. As you rightly said, yes, not known to me at least. People have gone for IDR, etc. As our panelist said, it was a Standard Chartered Bank, which was actually one of the only known case to us. Apart from that, I don't think any other people have gone actually for the IDR or something like that. But on the contrary, many people from India, they have gone for ADR and GDR, including one of the famous Indians, Enron, Satyam case also. But the only thing is, as panelists will be able to throw more light on that, because the people who invested through the ADR, GDR, they are successfully able to recover the money from Satyam. Leave aside the Indian people. Your views, please, actually, on this.
No, I think Satyam is one exception where all the investors basically they lost huge money. So of course, it is a loss to not only financial loss. I think it's a reputation loss to the entire financial system and stock market also. So that is a black page in the history of the stock market and the Indian company also.
Yes.
But Indian company was actually named at that particular. It is actually India's Enron. That was the
Yeah.
thing which was actually talked about it. Yeah.
Yeah.
Yes. Go ahead.
So the level of manipulation done by people must be knowing that they manipulated the bank receipts, fixed deposit receipts, manipulated and then inflated the bank statement, inflated the bank accounts and all of that. So it was totally a misstatement, misrepresentation. So uh, I don't think it's it will require one full
Yeah,
session
yeah.
to
Right.
discuss the entire
Yeah,
fiasco.
Lot of publication, research, analysis has been done, and Satyam, n number of things are actually available. People can
Absolutely.
actually go over it. Yeah, that's right. Yeah.
Yeah.
Yes, please go ahead.
Yes, sir. Thank you. The merchant banker to the IDR issue must deliver the following documents or information for registration with SEBI and ROC New Delhi. A. Instrument defining the constitution of the issuing company. B. The legal enactments or provisions under which the issuing company was incorporated. A copy of these provisions, attested by an officer of the company, must be attached. C. If the issuing company has a place of business in India, provide the address of its principal office in India. If the issuing company does not have a principal place of business in India, it must provide an address in India where relevant documents are available for public inspection. D. If the documents are not in English, a certified translation attested by company's KMP must be available for inspection. E. A certified copy of the certificate of incorporation of the issuing company in its home country. F. Copies of agreements entered into between the issuing company, the overseas custodian bank, and the domestic depository, which must specify the rights to be transferred to the IDR holders. G. If any document or part of it is not in English, a certified English translation must be provided. And this translation should be attested by a KMP of the company, authenticated by an authorized officer of the relevant embassy or consulate in India. And the translation must be attached to each copy of the original document. So we have to attach the original along with the certified translation copy. Subrule 5 talks about no application form for the securities of the issuing company shall be issued unless it is accompanied by memorandum containing the salient features of the prospectus. An application form can be issued without the memorandum if it is related to an underwriting agreement for the IDRs. If the prospectus includes a statement made by an expert, it must contain a declaration that the expert has provided written consent for the inclusion of the statement, and the expert has not withdrawn the consent before the submission of prospectus to SEBI and ROC New Delhi. And the provisions of Companies Act apply for liabilities arising from misstatements in prospectus and punishment for fraudulently inducing persons to invest in IDRs. I think with this provision, again, we are creating a legal binding for the investors of the IDRs, providing them the security from legal perspective as well. Subrule 6 talks about a holder of IDRs may transfer the IDRs, request the domestic depository to redeem them, or seek reissuance of IDRs by converting the underlying equity shares. These actions are again subject to compliance with FEMA 1999 and SEBI Act 1992 and any other applicable laws, rules, regulations, or guidelines. In case of redemption of IDRs, the domestic depository will instruct the overseas custodian bank to release the corresponding underlying equity shares in favor of the IDR holder. The shares may either be sold on behalf of the IDR holder or transferred to their name in the records of the issuing company. A copy of the redemption request will also be sent to the issuing company for their information. A holder of IDRs may nominate a person to whom the IDR will pass in the event of the death in Form FC5, which can be used for making such a nomination. This is a nomination for the IDR holder that can be done through Form FC5. And the prospectus or letter of offer shall inter alia contain the following particulars, namely general information, capital structure of the company, terms of issue, particulars of issue, company management and project, report, other information, inspection of documents. Yeah. So that is the holistic view of the regulations that are related to issue of IDRs. And as discussed by panelists, as far as we know, Standard Chartered is the only entity that has come up with it. And the regulations are more or less similar to ADR or GDR as discussed by Bala sir. Yeah, I know it is theoretical, but I have to tell in detail about all of them. Yeah.
No, it is there. It is there in the provision. Where anybody wants to go, but the only thing is practically people are not gone with it. That is it today. Yeah.
Yes. Section 391, which talks about applications of Section 34 to 36 and Chapter 20. Sections 34 to 36 apply to issue of prospectus by a foreign company incorporated outside India under Section 389, similar to how they apply to Indian companies, and the issue of IDRs by a foreign company. And subject to provisions of Section 376, the provisions of Chapter 20 shall mutatis mutandis apply for the closure of place of business of a foreign company in India as if it were incorporated in India, in case such foreign company has raised monies through offer or issue of securities under this chapter, which have not been repaid or redeemed. Yeah, we are coming to the fag end of the presentation, which now Section 392, which talks about punishment for contravention. If a foreign company violates provisions of this chapter, it faces a fine between 1 lakh and 3 lakhs. And if it is a continuing offense, an additional fee of up to rupees 50,000 can be imposed for each day of the violation till it is continued. And every officer in default of the foreign company is liable to a fine ranging from 25,000 to rupees 5 lakhs.
So you can, cross-link like officer in default of the foreign company. As you remember in the beginning, the regulator asked us to file details of their director, secretary, etc. So, so these provisions, when invoked, they pull out the detail from the filings,
Yes. Yes.
Yeah, that is the whole purpose. If something goes wrong, who's the
Yeah.
ultimate person who's to be nailed? That is the whole purpose. The information is actually collected by the regulator. Yeah.
Right, absolutely.
Exactly. Section 393, which talks about companies' failure to comply with the provisions of this chapter, not to affect validity of contracts, etc. Any failure by a company to comply with the provisions of this chapter shall not affect the validity of any contract, dealing, or transaction entered into by the company or its liability to be sued in respect thereof. But the company shall not be entitled to bring in any suit, claim any set off, make any counterclaim, or institute any legal proceedings in respect of any such contract, dealing, or transaction until the company has complied with the provisions of this act applicable to it.
So this is very important provision. So if you see the crux of these provision, that the Companies Act is giving protection to the party who is dealing with this company,
Yeah.
but they are not giving any protection to the company because they are in default. They are supposed to comply with the provisions of Chapter 22, and in the absence, the penalty or the consequence is very severe.
Yeah.
So in a way, it is prohibitory for them not to register.
Yeah, and as you rightly said, the other party is totally protected.
Yeah.
Yes. The last section under this chapter is section 393A, which talks about exemptions. The central government may by notification exempt any class of foreign companies or companies incorporated or to be incorporated outside India, whether the company has or has not established or when formed may or may not establish a place of business in India, as may be specified in notification from any of the provisions of this chapter. And every copy of such notification shall, as soon as may be thereafter it is made, be laid before with both the houses of parliament. As of now, there is no such notification. This is the section that describes or gives the power to grant an exemption. Thank you so much.
Thanks a lot, Tejas. You actually brought out very nicely lucid presentation. You covered almost everything what is there actually regarding to the foreign companies. I think, Dipti, we have answered all the questions. There is no questions are there actually in the chat box.
Okay, friends, we will close this session. Thanks a lot for your participation. Keep continue to support this way. Thank you, Mr. Yuk, for your wonderful insight. You're sharing the experience, you're sharing the knowledge, so much knowledge on income tax and other laws. Thanks a lot. Thanks a lot for everything. Thank you, Mr. Bala. Thanks.
Thank you very much to everybody. There are more appreciation
Thank
is
you.
actually
Absolutely. My
coming.
pleasure
People
to
appreciating
interact
you.
with you,
Lot of things.
fellow panelists. Thank you very much.
Thanks.
Thank you very much for providing this opportunity, Deepti and Atulji. And it was a very untouched subject, which is less traveled, and really appreciable of Mehta and Mehta in touching this specific topic. And your entire series, even I do participate in your series, and these are very informative and interactive.
Thanks.
Thank you very much.
Thanks a lot.
Thank you
Thank
very
you,
much.
all the participants.
Thank you very much once again for your valuable time. Really, you
Thank you.
added the value to the session, to which we are really thankful. Thanks a lot. I
Thank-
think we close the session at this stage, Dipti.
Yeah.
So
Yeah.
I would like to thank all the panelists, starting from Deepti ma'am, Bala sir, and Yug sir. Thank you so much for your valuable time.
Yeah.
And thanks to participants for their questions and insights. And also I would like to thank Sudhakar sir, even though he is not present. I would appreciate his support, and Atul sir as well. Thank you so much and have a great day.
Thank you. Thank you, everyone.
Very much.
Thanks
Thank
a
you.
lot. Have a good weekend. We'll meet yet again in another weekend for another session. Thank you.
Bye.
Thank you very much. Thank you all.